Hi, I'm Pat Keown, a research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flow activity for the week ended Wednesday, October 19th. Let's start this week's report by taking a quick look at the market activity. For the fund flows trading week ended Wednesday, October 19th, the S&P 500 index managed a little bit of a gain, 0.24%, but this did come on the heels of 2 straight weekly losses. The index rallied late in the week on strength from rising oil prices and better than anticipated corporate earnings. U.S. crude hit a 15-month high due to shrinking inventories in 6 of the last 7 weeks, which led to a kind of a spike in the energy sector. And among those corporations reporting stronger than anticipated quarterly results was Morgan Stanley and Goldman Sachs. Let's turn our attention back now to the fund flows activity. We'll start by taking a look at our macro groups and their weekly results. Equity mutual funds had net outflows of $4.5 billion last week. Taxable bond funds took in $1.2 billion. Muni bond funds had net outflows of $27 million, while money market funds saw $7.7 billion leave. Let's move on to our first group now, equity mutual funds. The $4.5 billion in net outflows was the group's 32nd straight week of outflows. This gives them approximately $155 billion in net outflows for the year to date. At this rate, it will be the highest annual net outflow since the $200 billion in 2008 that was caused by the global financial crisis. In this week's activity, as usual, domestic equity funds were responsible for the lion's share of the outflows, as they had $4.3 billion leave. And within domestic equity funds, diversified equity funds accounted for the majority of this, as they had $4 billion in net outflows. Let's move on to the sister group now, equity ETFs. Equity ETFs took in roughly $1.1 billion last week. Among the major contributors to these total inflows were some broad market equity products. The iShares Russell 2000 had net inflows of $1.4 billion, as well as the iShares Core S&P 500 took in about $340 million. On the flip side, the Spider Select Healthcare ETF had about $360 million leave. Moving on to our next group now, taxable bond funds. We'll start by taking a look at the mutual fund group. Taxable bond mutual funds took in $1.2 billion last week, spurred on by funds within the Core Plus Bond Fund category, which had about $600 million in net inflows. And then the emerging market hard currency debt funds had about almost $400 million in net inflows last week. Moving on to the ETF side for taxable bond funds, we see they had net inflows as well last week, pretty robust at $2.3 billion. The largest among them was the iShares iBoxx investment grade corporate product, had net inflows of approximately $600 million, followed by the iShares JPM USD emerging market bond product, had net inflows of just shy of $300 million. And on the sell side, we see the Spider Barclays high yield product had outflows of roughly $260 million. Moving on now, we'll take a look at the Muni Bond Fund group. And the streak is over. After 54 straight weeks of net inflows, Muni Bonds mutual funds saw approximately $27 million leave their coffers. The 54 weeks is the second longest in history, behind the 63 weeks that occurred from Q1 09 through Q1 2010. In this week's activity, the main culprit for outflows was high-yield muni products, had about $350 million leave. Our last group to take a look at now is money market funds. Seeing more of the same over the last few weeks. It looks like more volatility caused by the new money market regulations. Overall, they had $7.7 billion in net outflows. And if we take a deeper dive and look at the categories involved, then we see institutional money market funds once again having high net outflows, almost $13 billion, while institutional U.S. government money market taking in a lot of that, or actually all of that, with just about $15 billion in net inflows. Well, that wraps up this week's report. If you'd like to take a closer look at the data yourself, please join us at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.